प्रेजेंटेड बाय ईबिक्स कैश। हर खुशी के लिए काफी है।
Good evening and welcome. You're with us here on Business Today. I'm Aabha Bakaya. Let's take you through the headlines tonight. Market snaps 4-day losing streak as sensex surges over 500 points. Nifty ends near 17,700. A sea of green all across. Srei goes the DHFL way. RBI supersedes Board of Directors and seeks to initiate insolvency proceedings. Rajneesh Sharma, CGM Bank of Baroda, appointed administrator. On the show today, we get you an exclusive conversation with market veteran Madhu Kela, where he talks about his strategy in the markets currently, why he's bullish on PSU banks. Festive season kicks off as Flipkart and Amazon begin sales. We'll give you a sneak peek into their best offers. Tata Motors unveils an entry-level SUV. Bookings for the Punch start at 21,000 rupees. The stock market ended its 4-day losing streak with benchmarks gaining nearly 1%, led by realty, metal and power stocks. The sensex closing at 59,299, that's up about 500 odd points. Nifty closing at 17,691, up 150 odd points. Divi's Labs, Hindalco Industries, NTPC, Bajaj Finserv, Tata Motors, those are some of the top movers today. Almost an 8% move coming in on Divi's, in fact. And Cipla, Grasim, UPL, Aisha and IOC, a few of the laggards in an otherwise extremely strong market. All indices ending higher, real estate, metal, power. In fact, those indices up 2% each. The BSE mid-cap and small-cap index also up about 1.5% each. Srei goes the DHFL way. RBI superseding the Board of Directors and making an application to the NCLT to initiate insolvency proceedings. Rajneesh Sharma, CGM Bank of Baroda, has been appointed administrator.
The Reserve Bank of India on October the 4th superseded the Board of Directors of Srei Infra and Srei Equipment Finance Limited owing to governance concerns and defaults by the aforesaid companies in meeting their various payment obligations. The development comes a week after creditors of Srei Group rejected a request by the company seeking a 1-year standstill from any action, legal or otherwise, to recover dues estimated at around 35,000 crore rupees. The Central Bank of India has appointed Rajneesh Sharma, the former Chief General Manager at the Bank of Baroda, as administrator. Sharma has been the chair of the Lenders Committee overseeing the accounts of the Srei Group of companies. The banking regulator will soon initiate the process of resolution of the non-banking financial corporations under the Insolvency and Bankruptcy Rules 2019 and apply to the National Company Law Tribunal to appoint the administrator as insolvency resolution professional. The action has been taken under this section of the Reserve Bank of India Act of 1934. The Kolkata-based non-banking financial corporation has been battling a human resource crisis since December last year, with nearly 230 to 250 people leaving the crisis-ridden group. A UCO bank-led consortium had approximately 35,000 crore rupees in exposure to the Srei Group, while State Bank of India and others have already classified their loans as non-performing assets earlier this year. Bureau Report, Business Today Television.
Market veteran Madhu Kela, in a conversation with Udayan, Mukherjee and myself, shares a detailed overview of where he sees value in the market and opportunity for wealth creation in the current frenzy that we continue to see.
Last week we got you Rakesh Jhunjhunwala on the show, and today we have for you an old friend of his and a multi-decade veteran of the stock market, Madhu Kela. Madhu, it's an absolute pleasure to have you on the show, and I must begin by asking you how you're feeling now after such a strong rally in the market. Are you comfortable with where we are, or are you beginning to feel a little uneasy, a slight sense of vertigo?
So, Udayan, just as a background, this is the biggest possible and the wealth creation at least I have seen in my career in last 30 years. both in terms of the quantum of money being created, the quantum of wealth being generated, and also in the time frame which it has got generated. The last 18 months, global markets have seen $60 trillion of wealth creation, and India has seen something like $1.7, $1.8 trillion. Obviously this is in the backdrop that $35 trillion of new money has got printed world over. So we have to keep these facts in mind when we are assessing the markets. So again, after such a big rise and in this time frame, what is more important is there a risk of a crash? That is what investors are most worried. So is there a possibility of a correction? I would see after such a steep rise, correction could happen and will happen in an orderly manner in any markets. So this market can also see corrections in times to come, and those reasons will only be known of the correction after they have occurred. But I would say I personally do not feel that we are anywhere near any crash, or I don't see any event as of now which is pointing towards any crash or anything of that kind for this market.
Could the composition of the rally be changing now, Madhu? Because over the last few days, it's quite evident that the expensive part of the market, the richly valued stocks like HDFC Bank, Asian Paints, they are not moving much further ahead. But the value part of the market, like the Coal Indias, the NTPCs of the world have started joining in. Do you see any subtle alteration in the journey?
Yeah, that's the point. This is the point which I've been making, Udayan, and that rotation will happen. In fact, I am quite positive and bullish on the value part of the markets because they have been ignored for a very, very long period of time. In some of these names which you shared and some of the other names also have not seen any appreciation whatsoever in the last 10-15 years, right? While the companies have continued to do well, their valuations have only compressed. On the other hand, then I personally feel that the economy in India is in a cyclical uptrend. And again, what is happening globally, if you see, so much money being printed and interest rate at such low level, it is only natural that money in India will come, whether it comes through FDI, whether it comes through FII flows, or whether it comes to private equity route. And that is what we have seen in the last 12-18 months. And when we have a cyclical uptrend, which is combined with such low interest rates in India, clearly the stocks which are linked more towards economy, they are likely to do well. And if I club that with the kind of under ownership a lot of these companies have, and consider again the fact that they have not made any money in the last 10-15 years, there is a real case for this value stocks coming in flavor again. As the performance starts to improve of these companies, markets will take a notice, and even a small allocation to these sectors will see significant rise in stock prices in some of these companies.
But what do you do with the part of your portfolio, Madhu, now which has already done well? Because the last 1 year and all, many stocks have gone up 2-3 times, some even more. I remember a couple of years back you were very bullish on pharmaceuticals, but now, stocks like Laurus Labs, etc., which I think you own. But now that they have gone up such a lot, what do you do with that part of the portfolio, the pharmas, the chemicals?
So, I am still selectively positive on the pharma sector from a 3 to 5 year perspective, because that China plus story which we believed in has not gone away. However, we have put a lot of incremental capital, let's say for instance, in public sector banks, and I continue to be very, very positive on that space in public sector stocks and public sector banks. Let me just give you some synopsis of the thesis behind this conviction. To take for instance, there were 28 banks within 3-4 years back. Now there are only 12 public sector banks left, and going by the intention of the government, there will be only 8 in the next 2 years. So that there is a significant consolidation which has happened. these stocks are very, very cheap. Some of them are quoting maybe at 1 or 1.2 times operating profit or 0.5 times book value. You know, significant amount of ownership is still with the government. And if IDBI really gets privatized, which is what the government intention is, and if that happens, who is to say that some other banks, public sector banks, will not get privatized in times to come? And that's a very, very big event. So they are very cheap. B, they are well provided for. Most of these banks have provided 70-80% of their gross NPL in the last 5 years or so. C, we are clearly seeing a profit and loss account improvement in a lot of these banks. If you see last quarter, and I'm quite convinced the next few quarters will be a positive surprise to the market. So if I put all of this together and if I compare the absolute amount of market cap which is there for public sector banks, I think it makes a very, very good case for a good investment.
From the broader markets, Madhu, sub-themes that you've identified that could possibly, come out on front, really surprise the market, where you really see value and an opportunity, for some of the retail investors particularly who are looking for potential to really make multifold returns on smaller investments. Where do you see that opportunity in the market?
So I see that, as I said, I see that in an economic uptrend and economy-linked stocks. We spoke about public sector banks. I've been very vocal and very positive on this entire theme of real estate sector. Whether you want to play real estate as a sector or you want to play the ancillary of real estate sector, that's another theme. The one more thing which we have liked and we continue to like is this China plus one, because you see what is happening in China. The latest in course is the power crisis, which has emerged from nowhere in last 10-15 days, right? Also, the situation like Evergrande and the government intention clearly spelled out that they really are actually in a way dissuading foreign investors to invest money in large technology companies. Okay. So all this really argues well. If you are a corporation which is looking for sourcing sourcing goods, I don't think you can any longer rely only on one supply from China. And in that situation, country like India will be a very big beneficiary. Again, Aabha, couple this with Prime Minister mission of Atmanirbhar Bharat, which is basically what the government has been talking. And the government actually has walked the talk. The amount of PLI incentives which are being given to so many sectors, that is totaling to around 2 lakh crores to be given as a PLI incentive over the next 4-5 years. All this argues really, really well for some of the manufacturing sector, specifically which are competing with China.
Right. So, Madhu, which are the specific areas in this China plus one theme that you would be betting on? Because, you could play it differently. Some are thinking of companies like Dixon, which are into outsourced manufacturing. Some are playing it through the specialty chemicals route. What's your preferred way of playing this theme?
So I like, Udayan, as I said, I like companies which are basically some companies which are there in textiles for a moment, for instance. Some of the companies which you also mentioned. Actually, pharma broadly, pharma and specialty chemicals, they broadly fall in that era. Also, Udayan, if you look at the metal companies, wherein China, for instance, was exporting 60 to 80 million tons of steel every year. It is our belief that incrementally that exports will be very negligible. And that in turn will benefit the Indian companies which are exporting, which is why you see that the prices of steel, for instance, have been very high in developed markets. They have been relatively lower in China and relatively lower in India. And so that is why, in my career, when did I see steel companies exporting 40% of their production as exports when it comes to steel? So companies like this nature will benefit, and also because our local prices are lower, of steel compared to global prices. So the companies which are actually consuming steel, let's say forging companies or auto ancillary companies, even they will stand to benefit. So Udayan, this is like a buffet out there. You have to do real bottom-up work on a lot of these companies and really understand these companies, because one case, it's not like isolation. I can say that because it is China plus, you buy it. Ultimately, a company is not only made out of China plus. So if you do your bottom-up work, I think there are tremendous opportunities which are there in this theme.
Catch that full interview on businesstoday.in. Watch Udayan Mukherjee, our global business editor, and myself in conversation with market veteran Madhusudan Kela. All the opportunities, what he finds attractive in the markets while they're at record highs. The post-COVID revival of the real estate sector has had a flip side, the slump in affordable housing, as economic uncertainty and shrinking paychecks hit hopes and aspirations of many salaried employees and small business owners. In contrast, demand for mid and high-end homes has grown as well-heeled chase bigger homes. Rishabh Mishra brings you the detailed report.
India's real estate sector has been upended by the COVID-led economic changes that most other segments of the economy have witnessed. With the pandemic altering the purchasing power of many, the real estate market has witnessed a significant shift. According to a report by property consultant Anurag, the launch of new affordable housing projects came down from 44% to 20% between January 2020 and June this year. At the same time, the mid-end and high-end homes saw a boom.
The biggest trend is that we're seeing that the share of affordable housing is going down in comparison to the mid and luxury. So that's another impact that has happened on affordable housing.
The Anurag report says the launch of mid-end housing segments saw a boom, growing from 36% to 43% in the first quarter of 2021. A similar rise was seen in the launch of high-end homes, which grew from 15% in the first quarter of 2019 to 36% by the second quarter of this year. This trend has been driven by rising economy in many sectors like IT, fintech and startups.
The high income group, there we've seen that the wealth has grown. And as a result of which, a part of that growth in the wealth is going in buying bigger apartment, luxurious apartment.
The trend poses a challenge to the government's incentive schemes for boosting affordable housing. For developers, this means that chasing the higher end of the market would deliver better margins. Bureau Report, Business Today Television.
Taking note of the Pandora Papers, the government today said investigations in the cases will be monitored by a multi-agency group headed by the chairman, CBDT, and officials from the Enforcement Directorate, the RBI, and the Financial Intelligence Unit. The CBDT will also proactively engage with foreign jurisdictions for obtaining information of relevant taxpayers and entities. The matter pertains to the International Consortium of International Journalists, or the ICIJ, reports on a 2.94 terabyte data trove that claims to expose offshore secrets of wealthy people from over 200 countries. The ICIJ claims the investigation is based on a leak of confidential records of 14 offshore service providers that give professional services to wealthy individuals and corporations seeking to incorporate shell companies, trusts, foundations, and other entities in low or no tax jurisdictions. The Economic Affairs Secretary Ajay Sheth at a FICCI event said that the credit offtake has moderated in the last 18 months due to the pandemic. Listen in.
In spite of the pandemic, and the gross NPAs have come down from 11.2% to 5.9%, and net NPAs have come down from 7.5 to 2.4%. Even RBI's assessment, even in stress case scenarios, also shows that it will be well within the upper limit which we can afford to move forward. In the past, 18 months because of the lack of private demand, investment demand, the credit offtake has been rather moderate. Now, that's an area where the further work is needed.
India's e-commerce scene is heating up as Flipkart and Amazon kick off their month-long festival season sales, offering steep discounts on products ranging from smartphones, appliances and apparel.
E-commerce platforms Flipkart and Amazon are set for an intense battle in the festive period, with back-to-back changes in sales dates, signaling a clear unwillingness to concede ground. According to early data on Sunday, festive sales are off to a strong start, with demand from Tier 1 and Tier 2 cities driving the initial momentum. From Apple's iPhone to OnePlus to smart TVs, the online platforms are offering a wide range of products at low prices. If you are looking for an Apple iPhone, then the iPhone 12 is available for $49,999 on Flipkart, while the iPhone 12 mini is available for $38,999. On Amazon, the OnePlus 9 Pro is being sold at a starting price of $60,999 and the OnePlus 9 at $46,999. Industry experts believe that retailers could clock a record $9.2 billion in gross sales during the festive month. And the competition between the two giants is expected to be intense, similar to previous years. While Flipkart's Big Billion Sale is an 8-day event, Amazon India's Great Indian Festival will be a month-long affair. Bureau Report, Business Today Television.
The Tata Motors Punch is a new SUV that Tata Motors has unveiled in India today. The brand new SUV will be the most affordable SUV from Tata Motors in India, as it's expected to sit just below the Tata Nexon SUV. The launch could be expected in India by Diwali. Tata Motors is going for a bold look as the car comes with a chunky design language, sharp design elements like the modern headlamp and also a minimalistic interior with a touchscreen infotainment system. It is expected to have support for Android Auto and Apple CarPlay. That's all we have time for on the show tonight. Thanks so much for watching.